Morning, everyone. We'll be getting started in a few minutes, but I want to jump in. You are in the right place, but we don't start till noon. So I will see you all then. All right. Good morning. Yeah, the link is definitely on Telegram. New room, but hey, Ron, good morning. Hope everyone had a good holiday. There we go. I did. I did. Let's see what else. New Zoom room. Was that today, Rochelle, or your yesterday? Because we, I do, Sonny. Well, yesterday and Monday we were closed. The company was. So today they might just be backlogged. No, they're the same Monday through Friday now. No marathons, but a lot of races, 5, 10, 15, and two triathlons.
Hello, hello there.
Hey,
Can you hear me okay?
yep, hear you great.
Good, good, good. Let the room fill up a little bit. Can you make sure everybody got their notices and everything?
The telegram definitely went out.
Okay, good. Hey, Ron. Hey, Petro. Hey, Bob. Hey, Ray. I imagine a lot of people, the email link is not working. Huh. Email link doesn't work. Telegram does. Huh. The link from email. Let me let the guys know that. 1 second. Oh, okay. I guess Deanna's in here. Okay, I didn't know that. It's pretty close. Like, this is pretty good. All right. Hey, Ken, how are you? Got it from Telegram. Yeah, sorry about that, guys. If it's not working, they decided to. I don't know why, but they decided to change the Zoom room last week of the year. Obviously, to frustrate me and to confuse me and to make me work 3 hours today to change links. But here we are. It's all good. Randy, how are you? If there was anything, you know the Murphy's law. If anything can go wrong, it'll go wrong, Matt.
Yep.
Bingo,
Hmm.
bingo. While you weren't there too. Yeah, while I went, yeah, I went while I'm in Puerto Rico. Good morning, everyone. Good morning. We'll let the room fill up a bit. They'll send another email or so to let folks know. Yeah, it'd be nice if they had the right email. They, again, I don't know why they decided to do it at the end of the year. Yeah, the Telegram links works, but I guess the email one. We usually get about three. We've been getting about 300 people here. Oh, the zip line. I had so much fun on that zip line. It was fantastic. Matt, did you see the video of the zip line?
I did.
It's pretty cool, huh?
Yeah.
See, I told you I'm
It's good.
part ape. Got a monkey in me somewhere. Like to climb
But you won't
things.
jump out of a plane. Thought it was weird.
No
Zip line.
jumping out of a plane. The correct, but the hyperlink in the link is Roger just got so you know, the text in the email is correct, but the hyperlink, yes, they didn't change the hyperlink, of course. Yeah, it was me. Of course it was me. Who do you think it was? You literally see me going down the thing. Yeah, I did it. I did it twice. I did eight. We did 8 ways, one there and back, and then we did some more yesterday. So we did it twice. If anything can go wrong, it always will go wrong. Every time. Every time. All right. Let me share my screen. Today's not going to be the text of the email works too, but clicking the link in the email, if it helps the diagnose. Thank you. I appreciate that, Deanne. Okay. It always does. That's why Warren Buffett, he invests in small moving parts. One second. All right. Now, what is this? Frank says, good morning. Just signed in for your trading pit. The first stupid question. I always come to the regular Telegram room. Do I have to remove this? No, you don't have to remove it. Please don't. Yeah, for anybody who just signed up for the trading pit, please don't remove your Matt. We can't see you, by the way. Don't there you are. We please don't get rid of your regular Telegram, because the regular Telegram is going to be used as well for both. Don't switch. You can add like 100 Telegram channels so you don't have to worry about that, Frank. It's not a stupid question, because we've had someone say, hey, I have to remove, someone for some reason thought they have to remove the old one to get the new one. And no, you could put them next to each other. I have them like on top of each other. I have T-Buzzes, myself, Lances, so I can keep track and seeing what everybody else is doing. I got to get on Celeste. Having an issue with lifetime trading pit access link. John, please call customer service for that. All right. Let me share my screens. My screens, not my screens. See, Matt, I misspoke. I usually say my screens. Oops, let me unshare this. Hold on a second here. Oh, all of this stuff. Matt, can you see my screen?
Yeah, we see bar chart.
Okay, good. Yeah, I got all this stuff on here right now. So let me just open the chat here. All right. Did you have a nice few days off, Matt?
I did.
Did you study that doc I was asking you to study?
Yep.
Good. An update to change the Telegram trading pit version. Okay. So let's look at the stock market. And most of you can imagine right now the stock market is rather flat. Now, what you're looking at right now is the market's doing absolutely nothing right now. And if anybody's going to ask me, why are you not day trading today? I don't even know. Yeah, this is the VIP daily webinar. I don't even know how to answer that question other than saying, if you play cards, you want to hit the deck when the odds are stacked in your favor, right? Well, if you're day trading right now, you know who you're trading against? Yourself. there's nobody trading right now. Nothing is going on with the market right now. There you go. Nice. Good to hear that, Brendan. Good that you're trading that. Good to hear that. Go ahead and grab that one too. Where did you get that one, Brendan? Just out of curiosity. But if you look at this is a weekly. We're looking at weekly right now. You could see how we are in comparison to these levels, which I drew months ago. And here you could see it on a daily time frame. Now notice how we're just sticking around these levels. This is the all-time high in the S&P right here. And we're just kind of Nice. Nice. Good. Jack Carter. Good, good, good. Excellent. We gave a crypto stock the other day too, I think. Coin, I think. Good, 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 good. I'm glad to hear that, Adam. You go ahead and copy all those, Matt. So right here, notice we're just kind of sitting around here. And until we break these levels, until we truly break these levels, nothing is going to happen with the market. We either have to break down or break higher. Now, here's the interesting thing. If you look at the bond market, and I would imagine the bond market is up a hair right now. Look at where we're at. We're at this level right here. And the question now becomes, are we going to break higher or is this going to be a swing high? In my opinion, the bond market's actually going to go a little higher before breaking down because there's a lot of stops. And this winding process typically leads to higher prices. But the problem is we still have a full quarter till we get to March. And I think it'll happen around, mark my words, third to last week, probably last week of January, first, second week of February. You will see it. You will start seeing it. And what you will start seeing is the bond market starting to break up a little bit. And what will happen with the stock market when that happens, more likely than not, you're gonna see the stock market hit. And when I'm saying this, I mean this with a very high degree of confidence. All of this right here is going to be undone. And we're going to go right back to this level right here. So right here. From here, we're going to break this level and we're going to come right here. And then the question becomes, here, let me draw this here. And then the next major level is right here. And that's the 50-day moving average. And that erases everything. So I'm going to keep this on. I think the bond market is, Ken. I think so. That's all right, Jeff. It's all good. But I think what's going to happen is, and I really implore you to write down these levels because these levels are going to become very crucial in 2024. And I believe we're going to break down before going higher. I don't think we're going to be going higher indefinitely. I didn't say that, James. I didn't say that. I would wait. I wouldn't be going long TLT right now. I would be very cautious, especially at year end. But my point is right now, I think we're going to start undoing these levels and we're going to be coming back either to this level or this level, depending how negative the Fed is. But I'm going to tell you guys something. John says we're only getting a look at your parcel screen. Matt, can you see my whole screen?
Yeah.
Yeah. Okay. Yeah. John, you can move me. You should be seeing my whole screen. I'm showing my entire screen right now. Yep. Whole bar chart. Yeah. Good. Yeah. Everybody could see the full screen. You got to adjust something on your computer. So I believe as the more we start hearing negativity about the Fed and this rally right here, there's just this is more year end. Remember, once the fund managers, thank you guys. Once the fund managers once the fund managers book their gains for 2023, they don't need to prop the market higher and they're going to want to pull back and they're going to start offsetting a lot of these positions. Now, I told you right around these levels that we're going to have a very strong November and December as a result of seasonality. Well, that seasonality is coming to an end in a couple of days. And after that, we need a major catalyst. And everybody's going to be saying, what's on deck for the first quarter? What's on deck for the first quarter? And you know what's on deck for first quarter? Nothing as of yet. What does it mean to you, Julie? It means to you that we're probably going to undo a lot of this and we're going to start going south. The market is these levels are price levels on the S&P. And this tells us that eventually over the next month or two, we're probably going to unwind a lot of these losses. And I don't think earnings are going to be up to par. Real earnings start coming out in in about 3 weeks, 2-3 weeks. and there's just not a lot of there. So there's going to be, we've been buying calls and calls and calls. I mean, let me show you this. This is ridiculous. Let me show you a couple of things here. And I'm not trying to time the market and tell you to go all bear right now. What I'm telling you to do is don't be overexposed to the upside and start protecting yourself to the downside. And I'll show you how to do that. Look at the number of stocks. Let me just show you this. Let me go back one day. Market's a little choppy right now. Let me go back one day. Yesterday, we had 111 stocks making 20-week highs. We have 4 stocks making 20-week lows. I'm not predicting, Cyrus. I'm reacting. I'm reacting by drawing these levels. I'm not predicting at all. What I'm saying is that when it comes down, we're going to start hitting these levels. And these are the levels we need to pay attention to because these are the levels of support. That's what I'm saying. And I'm giving them to you. Just like here, I said, we're going to have a strong November and December, not because I know anything, but because did you turn on your speakers or something, Matt?
No, they're the same.
Huh. I just had all of a sudden I had a bunch of echo. Yeah, all of a sudden you heard that too, huh? Now it stopped. It now stopped. Yeah, it just stopped. Okay. Well, whoever had it it stopped. So again, so be careful. And the reason I'm telling you this is, let me show you the reason I'm telling you this, Cyrus. And I'm going to show you right now. I'm not predicting anything. I'm going to show you something. Let me show you this. Let me show you this. Sorry about Doug. I'll be back. Well, you're on your iPhone. That could be a reason why it's choppy. Is it choppy for you, Matt?
Yeah, a little bit.
Huh. Well, I'm back at my, I'm going to be leaving and flying out, going to the airport right after I'm done with this broadcast. So this is it for me in Puerto Rico. I'll talk about that in a few minutes, Maralissa, I think it is. I'm going to talk about that in just a few minutes when I talk about my top stocks. So this is the number of stocks, and I haven't brought this to your attention in about 4 months, maybe 5 months. What you're looking at is 5 years of number of stocks trading above the 50-day moving average. This is where we're at right now. In the last 10 years, we've been here once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. You can count this one if you want, 8 times. It doesn't happen very often. And typically what happens after we go to these levels? Kaboom, 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 kaboom. Not always, but usually. With what we're seeing in the market, I'm expecting some pullback from here. So it's probably a good time, sometimes towards the 2nd or 3rd week of January, to start hedging the portfolios that we're going to be doing here. Yeah, I'm actually burned, Gus. I got a sunburn had a sunburn on my face and my stomach. I did. I was by the pool yesterday, the day before yesterday. So now, with that said, what you're going to start seeing is more chop and eventually more breakthrough because stocks just can't withhold these levels. And we already know why they're buying. So I think that based on momentum levels and based on the stock market, I think there's a good chance we're going to start seeing some downside. Now, remember something. I'm not predicting a crash. I'm not predicting any sort of travesty. All I'm saying, and this is really, really simple. All I'm saying is we're going to have some corrections from this. And, markets do 2 things. They sucker you in, and then they hit their target. They sucker you in and they hit the target. They keep doing that over and over and over again, right? This is one of those times where it can't just stay at these levels. It needs to have some volatility. And we've been having very low volatility. So typically, beginning of the year, after a major rally like that, especially at the end of the year when you have 2 straight months of direct upside. This is not unexpected. And let me go 10 years. Let me now show you 10 years. This is 10 years. 1, 2, 3, 4, 5, 6 times. So am I saying it's going to happen, giving you levels? No. What I'm saying is we will have, obviously the markets will not go straight up forever. And what I'm saying is when they do go down, and I'm going to give you these, and you're going to write these down right now because they're going to help you this first quarter because these are major levels on the SPY. So you better be writing them down. Not really. I mean, we kind of know how it would react. Usually it goes down pretty good. And by the way, the number of stocks in the S&Ps that are making all-time high right now is 28%, the lowest level we've had in a while. Well, she is a CPA, Betty. So here are the levels, and I recommend you write them down. Let me just... I mean, she is a CPA, right? I don't think it's starting now. It's going to, let me explain to you, Betty. Institutions, now, you don't need to be an Einstein to know this. Institutions need to beat the S&P. If institutions start selling now and locking in profits, they I don't think so. I think they want to outperform. They don't want to risk the next few days. So I don't think now. I think beginning of the year. Yeah, I'm going to give you the levels right now. That's why I want you to write them down. And Matt's going to post them in the chat right now as I write them. The 481.31, 481.35, that's the resistance level. Then first level of support, 472.21. Then 459.75. Then 453.80, or actually, excuse me, 453.66. Sorry about that. And then 466.18. Yeah, I don't know about any of that. Yeah, usually sell-offs don't happen till like and statistically they don't. So that just doesn't make sense because statistically the sell-offs happen after the Christmas holiday, which ends after the second. Correct me if I'm wrong, folks. Second trading day of the year. Is that right, Matt? I posted it in the Telegram channel just a few days ago. Yeah, Bob says yeah. That's what I think. It's so after statistically, Betty, next week, a week from now. January 3rd. Thank you. We're all saying the same thing. So yeah, seasonally, what you heard is not accurate, but maybe what you heard is accurate. It's just now means like a week from now. Well, this is this is based on seasonality. This isn't based on what you heard or what you think. I don't like to talk about what I heard, what I think. I like to talk statistics, numbers. No, it'll be very gradual. I'm not seeing any panic, but selling takes 3 times over, but we're not there yet. And remember, look at this level. We can go down to this level, 472, which is, nothing. We were there 3 days ago, and we could sit there for 10 days. And then we can go down to this level right here, which is only 460. We're not talking about we're not talking about a massive sell-off here. We're talking a sell-off that it could be 5 big days or it could take 2 months of slow days, but we're not talking about a major sell-off. We're talking about filling this gap and then coming back up. So what would that mean to us? Well, Julie, maybe, I don't know how long you've been doing this, but you know that there's a thing called correlation with the stock market with about 80% of stocks. So if the stock market goes down, all of your stocks are going to go down. That's what it means for you. I don't know how else to say it. It means your longs are going to lose money. Your shorts will make money. I don't know how else to say it, but what it means is what I'm trying. Yeah, for those who are maybe inexperienced or new, or maybe I need to kind of connect the dots and the T's. You need to get out of your long stocks and prepare for the short side as we start heading below these levels. So what I would do now, Roger, are you telling me I should liquidate everything I have and get out because we're going to have a market crash? No. All I'm saying is the upside that we've enjoyed for the last couple of months may start diminishing. You may want to lower the load a little bit. Yeah, yes, a little, what goes up must come down, all that stuff. Just a little correction. That's all I'm saying. Nothing crazy, nothing massive, nothing that's going to raise eyebrows. A natural event has to happen. No, and we don't want to pick highs. We don't want to pick lows. We just want to casually start offsetting some positions and gradually start moving into puts. That's all I'm trying to say. And I'll keep you guys abreast of this all the time. You don't have to worry about it, but you got to understand this. It's very healthy for the market. Without that, the market's going to be doing just doing nothing, just like this. Exactly. That's all I'm trying to say. S&P is correlated to only 80% or 85% of your stocks, which means it's impossible for your stock to look, haven't you guys noticed most stocks have been going up the last couple of weeks? Well, why do you think that is? Think about it for a minute. The stock market's been going up. So when the stock market stops going up, all those stocks, you know how I always make a joke, everybody's an Einstein. Everybody's an Einstein when the market in a bullish market. That's all. These kind of look, you go up here, you come down, you go up, you come down. That's how the market works. And this has to be retraced. And when you see momentum levels at the highest levels, which I haven't talked about, how long, Matt? Like 2 quarters now?
Yeah, a while.
A while, right? Hey, Ken, when was the last time I brought up my momentum? How many stocks are above the 50-day high? Like 6 months ago? It's a good time to listen. That's all. So let's talk a little bit about oil, actually. Long time. Yeah, long time. I'm talking about being reasonable. I'm not trying to time the market. I'm trying to be about being reasonable. Okay. Energy stocks. Energy stocks have been hugging the 200-day moving average. This to me looks like a shakeout, a nice trap, bear trap. So I believe if we can break above the 50-day moving average, which would coincide with this level right here, we're going to start testing the high. The high is at 92.38 on the XLE, and I think we're going to start hitting that level. We're gonna hit the 50-day moving average. We're going to hit, if we hit the 50-day moving average first, then we would hit 90, and then we would hit that level. But I think this shakeout is exactly what this energy market needed, and I really like how it's hugging the 200-day moving average. And also, when the Fed starts saying, hey, we're not ready to lower rates, energy will be supportive of that. Sounds good, Stephen. Have a good one, and thank you. Same to you. So that's first. Now, let me give you a list of stocks that I'm liking right now. So first stock, somebody asked me about gold, GLD. And you could see I drew this line for gold here. So let's go a little further back. Look at where I drew this line. And don't tell me I drew it today. I drew it a long time ago. And look at where gold is right now. And look at how it's coming up. So folks are saying, should I be buying gold? Well, my answer to you is wait for gold to break above this level. And I think gold is going to break above this level because remember, negative stock market news is when people sell stocks, they buy things like gold. So if we stay around this level for another, say, 2-3 weeks and we don't break it, we're going to bounce hard down. But I don't think we will. I think we're going to break this level. What do you think, Matt?
Probably.
Yeah.
Yeah.
So this is, we're looking at 5 years now. Just want to show you guys something interesting. Nice little ascending triangle there. Or wedgie. Anyway, it looks like it can go higher. So I would wait for gold to break 194. And then what it usually does is after it breaks a level, it bounces. It comes back for a test, and then we can go long. But I want to see it break this level first. Need to see it break this level. Very, very important for it to break this level. So we're going to just put an alert there, and we're going to hold on, okay? We're not going to do anything crazy right now because we want this level to be broken first. We don't want to do anything on gold because all those companies, we all know that the ETF will drive gold prices. So we want to see ETF go higher. Until we do, no soup. Put an alert there for yourself. Next stock. Sunrun. We got about $2-3. We're breaking above the 200-day moving average. Probably put my stop loss right here below this big bar, because if it breaks this big bar, I don't think I'd want it anymore, which would be at about 17.95. I would probably lower my exposure around the 24 level. I don't have TC2000 here, guys, so bear with me. How fast we get used to things, right, Matt?
Yeah.
We go out about 16 days. Volatility is really, really high, so we want to go as deep in the money as we can. Oh, this one's great right here. We can go 17. Right here, 17 strike price, 16 days out. What does the 24 exposure level mean? I don't know, Julie. I don't know what you're talking about. I think 24 is the price level I gave you. It's not. It's a price. It's a target price. Right here. Lori, you were the one having problems with the page loading. Did it finally load for you? Good, 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 good. Okay, why do we like Alcoa right now? Remember I told you guys that a lot of these stocks are going to start moving up. A lot of institutional traders don't want to buy stocks that are all-time high. They're going to run up. Brendan, everything we're talking about is on the call side. We'll talk about puts later on. And here we would put the stop loss right at the 200-day moving average where the 200 meets the 8. It's actually a perfect spot for it. If it starts trading in this zone, we don't want it anymore. The stock has good upside all the way to about the 37.17 level, and then it takes a little pause. As far as options are concerned, we'll now go to the 12th, which will give us 16 days to go. And we will go to the 31 strike price options right here. Hey, that's great. Told you it was going to be a good one, Stephen. Go ahead and get that one, Matt. All right. ASO. Why do we like Academy Sport? By the way, sporting goods usually do good in the beginning of the year because people have the whole, I'm going to start going back to the gym nonsense, which they stop doing 2 weeks later. But that's how gyms make the majority of their money. You have till about 69 here as resistance. The stop here would be 59.21. People love gyms first 2 weeks of the year. Oh, man. That's where they get like 60% of their money. So people need gym clothes. So, and your stop loss would be right there. Let's go to the option. So true, Adam. So true. Again, we would go 16 days out, and doesn't look like the spreads are okay. You can get it off here. You can get go with the 60 strike price. They're not too bad. But Roger, volume is so low. Yeah, but spreads are tight. You can there's a market here. Yep, exactly, Ken. Exactly. Oh, Lulu for clothing. You know who loves Lulu? Graham. He hooked me up with Lulu. I love Lulu now, but Graham is in love with Lulu. I'm not joking. Graham Lindman, he loves Lulu. He's the one that hooked me up. I didn't even know about Lulu till then. I mean, back then. I don't mean the stock. I mean the actual clothing company, the company. Yeah, Lulu and Crocs were the hottest clothing companies last year. General Dynamics. Look at this chart. Do you like this chart, Matt?
Well, yeah.
I can't hear you. What?
I don't love it, but it looks good.
Yeah. You don't love you like them over here, right here.
Yeah.
Yeah. I like him over here. I gave the option, Deanna. I gave the option. The stop loss here would be right here, actually, ironically, right below the stop. See, Matt, if you were buying right here, we could stop out like with like a quarter loss and know whether we're right or not, which is great.
Yep.
But I like to make life a lot more difficult than Matt. So right there, stop loss of 248.95. And 250 strike price right here. This is where the money is, right there. 250. Hey, now we got 343 people in here, Matt. I love it. Eaton, notice the same type of chart pattern. I still like this stock. I still like the stock, and I think it's got more to go, more upside to go. It's being very, very defensive, and it hasn't really had like a parabolic move or anything. But you got to keep stops, tight stops on these. 233.22. When should we buy these? Well, first of all, you shouldn't buy all of them. You should buy the one that you think is best. I'm not going to remember, this is a learning exercise. But Paul, what I would do is I would wait as long as you can before buying them because we're going into holiday. Okay. So stop loss right here. Let me give you the option for this one. Most of these are expiring in 16 days. This one doesn't have 16 days. This one only has 23 days. And actually, you know what? It's actually not that bad. This 240, it's not too bad. You can get the 200 for $41, roughly. Save you from spending $240. Don't go buying a 250 or anything like. Don't do that. Don't do that. If anything, buy the. You know what? Here. How about this? If you're too cheap to buy the $40 one, buy the 230. At least you get most of your delta there. It has resistance from December around 257. Let me take a look real quick. Let's take a quick look. I like when people talk numbers. No, it looks like it overcame that resistance. We're trading above that level. Yeah, we're trading a little bit above that level. Oh, the delta, if you go to the 41, will be like 95. Otherwise, it'll be like 75. I mean, it's not bad or anything. Next one, pool. I like this, how this one is coming up. Now, see here, there's a lesson here. You see this flagpole right here? This is dangerous. This is dangerous buying. I'll still buy it sometimes, but this is dangerous. But look at how it consolidates and breaks higher on very low action and just naturally comes up. That negates this big bar. Now you don't have to put your stop loss right here. You can put your stop loss right here. A little higher, maybe, like right there. Right there, about 385.24. And now we could take upside, and the upside target can be 424. You see? Delta is the sensitivity of the option to the underlying asset, Jeffrey. So for every dollar the stock goes up, if let's say you have a delta of 0.5, the option would go up half a dollar. Let's say option delta is 0.75, the option will go up 75 cents in comparison to every dollar on the stock. A little option lesson there. So you have some upside there. Let's look at options. I don't even know if the stock has good options. No, Julia, not inside trading, just a squeeze, just a price squeeze, institutional price squeeze. 403, we can go right here. Too expensive, way too expensive. Way too expensive. Next one, TD, a little Canadian bank. And by the way, I told you guys about 6 months ago that the Canadian banks are going to go up, and they've been coming up. Now we got resistance here. We got pretty strong resistance here at 66. So I wouldn't do it. I would wait for it to go above 66. We scratch this. So you do options by the positive up change. I don't know what you're saying, Julia. By the present, I don't know what you're saying. Email me, roger@rogerscott.com. I don't understand what you're saying. Let's move on. I'd love to explain it to you, but I don't understand what you're saying. PDD, what happened to PDD? This is the second time somebody asked me about PDD. Well, I don't even remember what the call on PDD at this point is. But I could tell you right now that liquidating it right here would be the idea. Just if I was looking at it with a fresh set of eye. All right. A lot of folks are concerned with PDD for some reason. Matt, when did we give PDD out?
I don't know that we did.
I don't remember.
I didn't.
You gave it on 12/19. You guys are something. You guys are asking me about a stock. Remember, I always say if it doesn't do anything in the next couple of days, get out.
You
Yeah,
do say that.
I always say that, but they don't listen to me. I do like it. I still like it, but it has to break this level up here. Yeah, it is kind of old news, but anyhow. DHR. Let's look at some more DHR. This stock has till 239. So we still have some upside here. But you know what? I'd rather it break up. We're going to skip this one. I like the other ones I gave you better. Alerts, Ann. Alerts. Send alerts. TRV. I always say that, Mickey, but nobody ever listens to me. When I gave it to you, I know I gave you guys levels. And I always tell you, if nothing happens in the next few days, get out. Okay. Nice consolidation. Hasn't popped yet. These are the stocks we like. Right, Bob? Nice stock. Stop loss right here. 179-ish. We want to be below all this action. I like this stock. Right. Of course, Ken. Everybody has very selective hearing. One second here. Does the high delta mean that I'm deep in the money? The higher the delta, the deeper in the money. Big Daddy. I love the name. You're going to have to talk to Matt about that. It sure does, doesn't it, John? It sure does. So option expiration on travelers. Let's see. I just muted myself. Sorry about that. Look, earnings are on the 19th. So you definitely don't want to stay in the stock past 18th. Okay. And I wouldn't stay in it for more than 5-6 days, but anyhow, we would go to they're expensive, man. They're expensive. I'll tell you what you do. You go ahead and buy the 175s right here. You'll thank me later to have intrinsic value at least. All right. Now, I'm going to give you some short stocks. I don't want you doing anything right now on shorts. I want to give them to you because these stocks are going to become good shorts when the market is right. Okay. I gave you this one right here. I gave this one to you right here, and I'm giving it to you again. It still has ways to go. Can go up to about 424. Okay. But wait for the market to agree with you. Wait for the market to be on the same side. Let's go to puts now. We're going 16 days out on this. If you guys made money on this, you could let me know. I know a lot of you do. $16 days to go. And we're looking at the right here. No, the liquidity sucks on these. And I don't want you doing 450s. Yeah, I'll probably want to just wait off on these or do the underlying. Yeah, that's the problem, though. You're welcome, Vivek. You're welcome, Matt. And you grab that, Matt, too. Yeah, the 430s. No. I don't like to go out of the money. You can go to 450s right here. Just do the 450s. And I'll tell you what, buy the 450 put and sell the 440 put. I could live with that. Glad to hear that. I told you it's going to go higher, Brendan. By the way, somebody just mentioned Airbnb. I don't know the stock technically, but my wife has been telling me all week long. She used to use them for all our trips. She's been telling me nothing. She can't stop saying how they suck now. So for whatever that's worth, she's really on top. She says that Expedia bought another company and they're much, much better. I don't know the names. I don't track it. I probably should listen to her more. But she's been telling me this nonstop all weekend how Airbnb is terrible, how their reputation sucks now. Oh, they're cracking down. They're not supervising the people. They're letting him, like, she rented a spot in Tampa with her friends. They said safe apartment. It was like in the ghetto. So just a lot of stuff that they're not there. She explained it all to me. She had like a million reasons why they're not the company they were anymore. Just government cracking down on them. Yeah, they're going down. They're doing very, very problematic. But my wife is telling me this from her experience. You know, remember when Hoka shoes before it became really popular? I was telling you because she was telling me she couldn't stop talking about it. That kind of a thing. When my wife tells me stuff like that, it's always right because she's experiencing it in real life.
Yeah, there's been a few legislations in a couple places that have really prevented it. I know in Arizona is one area
New
because
York
they go
too.
in they buy these nice they have these nice homes in these really nice neighborhoods and it's an Airbnb. And so constantly, like in your neighborhood, imagine if the house next door just had parties
No,
constantly.
no bueno. That would
Yeah.
be horrible, horrible. So yeah, it's really so take it from somebody who my wife, you know, she takes my kids out of town, she travels, she likes to, takes her parents with her. So she used to use them, she used to love them, and she's like, oh, this went bad, this went bad, this went bad, this went bad. All this whole trip, she was telling me about it because she wants to bring her folks and my folks here in the next couple of months. So she was telling me all over it. There you go, Matt. Anyway, another one, not ready to go yet, but put this on your radar. So I'm giving you stocks that I think will be the best shorts. Hum, NTS, a couple of other ones. Let me just do this here. But my wife, when she starts talking like that, she's always right. I should listen to her more. Right here, right there. Nice breakdown. Keep an eye on these stocks. Make a list of these stocks. No, not Nike. And I'll tell you why not Nike. Let me show you why. There you go, Cyrus. Because Nike just started breaking down. I want stocks that are breaking down hard, really, really hard. I want stocks doing this. This stock, Nike stock, it's a big consumer company. It can fill this gap. I want stocks that are in the bottom of the barrel. All right. Um, and one more. And I told you about the stock about a month ago, and about 2 weeks ago, and about a week and a half ago, and no, nothing has changed. The stock right here. And this stock actually is ready for action. It's already below the lows. I'll give you the option for this one. The stop here would be right here at $78. Let me give you the option for this one. Matt, you would speak to Matt Ray or send customer service an email. They'll help you out. All right. Arch Capital, 23 days to go. I could live with that. Let's go to puts. The 75s. They're not all that expensive right here. Now, remember, all of these trades I've given you, you probably don't want to get into them today. Remember, says AMD was another winner. Are you going to be able to give us another cash flow trade this week? Yeah, tomorrow when I come into the office, I will. I'll be seeing Matt in the office tomorrow, so I'll give you one tomorrow. I just don't want to play monkey business with this market right now. It's just very volatile, and I want to. And see, here's the problem, Mermis. We're going to sell options. The premium's going to be low, and then the market picks up, and then they're going to be more expensive before they become cheaper again. So I'm trying to get a little bit of a movement in the stock that we're doing, but I think I could. I think I could do it with Tesla or Nvidia. I think we could be okay. All right, Matt. Why don't you go through seasonality? I want to hear seasonality right now. What is the best trade I like right now? No trade, Bob. I hate all trades right now. I think markets suck right now. I think your odds are horrible, and I think you're in a low probability trading environment, which is why I liquidated alpha rotation and first strike last week. No, I know. No, I'm just being honest with you. There's no edge right. Yeah, see, Ken, you have no edge right now. You're sitting at a casino and you have no, and the card counter is out to lunch. I don't want to give you guys shit. Excuse my language. I just don't want to give you nonsense. You have zero advantage right now. You're literally competing against other guys who are trying to move NVIDIA. It doesn't make any sense. Don't do it. Thank you, Manny. Go ahead, Matt. Give us seasonality.
Sure thing.
My job is to give you guys winning trades that have an edge, not cockapoo.
All right, there's the long side for your sectors. Pretty green. The only thing that's really not a buy, quote unquote, is consumer staples. And then on the short side, I mean, the accuracy looks somewhat good, but if you notice, the prop factors aren't there. So definitely long side, except for, again, consumer staples right there. But this is going to be a little bit wonky because of the low volume we're in. 10-day hold is probably your better thing to look at the moment. It's almost always is, but you can see consumer staples has followed through to the downside. Healthcare maintained strength, consumer discretionary also with it, and maybe the communication sector. Hard to tell with four trades. You can look at the constituents though. On the long side, the number is a big one. 310. So pretty good there. Oh, look, Airbnb. Only two trades though. MasterCard looks good. I mean, super broad again. It's hard to really see a lot of a trend. Seems the only trend is up. And it's kind of passed all around. The only thing I don't see is a consumer staple. Well, there's one. Oh, just saw it. Dollar General. On the short side, It's interesting right there, Hershey's. Might want to take a look at it. 24 trades, 5 profit factor, 91% win rate. That is pretty good. Let's check it out. Hershey's, well, probably not a bad short. Spreads aren't too bad. Definitely one to take a look at. Well, you could look at PG too. I would definitely like the consumer staples if I was going to short anything. And that's consumer defensive on here. For your 10-day hold, it's wigging out on me. Give me 1 second. There we go. For your 10-day hold, look at that tan. Weren't you? You were looking at Sunrun long, right? Roger, are you muted?
No, I'm sorry. What were you saying?
You were looking at Sunrun long, right? Run,
Yes, I was.
RUN.
Yes,
Yeah,
yes,
well, the solar ET, that's a solar company, if I'm not
yes,
mistaken. Solar ETFs is
yes.
also pretty strong for a 10-day period. So,
Yeah, if you look at sorry, I thought for some reason I turned my mute on my I was muted. But if you look at seasonality, and if you look at solar stocks, they've been popping. They actually are. I didn't realize how sensitive they were to interest rates, but they are. They're very interest sensitive to interest rate. Who would have thought, right? But they are. It's a new world out there. So yeah, run
well,
run
they're
was one.
heavily subsidized.
Yes, that's exactly right. Yeah, 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 yeah. I'm just so it's very hard for me to wrap my head around, solar energy in terms of like really being anything other than residential, but it's going to happen in the next 20, 30 years. In
Good.
California, I have a friend. This guy's really cheap. This guy's a great guy. I've known him since high school, but he's really cheap. And he got himself a solar car because of all the subsidies the government gives him. His payment when it's all said and done is like $30 a month.
Wow.
Yeah, 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 yeah. He got one of those little cars, those little I don't remember the name of them, but like 23 or $30 a month he pays for it. Like go car. I don't remember what it is, but I don't know. I wouldn't, I mean, it looks like a golf cart. That's right. Yeah, they're having smart car. That's it, smart car. Yeah, it's just I'm a little, I don't know, call me old school, but anyway, please continue. I don't mean to interrupt you.
Well, that's pretty much it. We're kind of waiting around for volume to pick back up. Until then, this thing is not super fruitful.
Yeah, there's not, there's no right answer. And I hate telling you guys don't do anything, but folks, not having a position is a position. If you're long right now, the best thing to do is start to not saying you should cut everything and people are going to cut everything. Watch, there'll be 10 people who completely reverse and go short 180 times leverage. Don't do that. Don't do that. Seriously, just start unwinding some positions. Be careful of tech stocks, highly volatile stocks. You're not going to see any volume between now and the end of the year. You may see a little volatility beginning of the year as people come back. But honestly, hedge fund guys don't come back till the second week of the year. They don't. They just don't. So we got to be careful here. Very little day trading, mostly swing trading. Not enough moves intraday. Be careful. Be careful. All right. Thank you so much. Thank you for being here. If you haven't subscribed, Matt, do you have a link to my Telegram group so they can subscribe to the free Telegram channel?
Yeah.
I want you to post it because
rogerscott.com/telegram.
yeah, just post that for folks who have not been in my Telegram channel. Thank you, Ray. My vacation's pretty much over. I'm literally. We have an Uber coming in. We have an Uber coming in 40 minutes to pick us up, and I'm going to the airport. So that's that. Thank you, Timothy. Thank you. Thank you. Thank you, guys. Have a great time. And I will hopefully, if everything goes right, I'll see you tomorrow with Matt from our office in Ponte Vedra Beach. Bye, guys. Turning
Bye,
point.
everyone.
Turning point. Bye, everyone.